Online brokerage stocks like TD Ameritrade, E-Trade, and Charles Schwab all got pummeled today after CNBC reported that JP Morgan is launching a new app called You Invest that will offer all customers 100 free trades in the first year and no fee access to the bank's stock research. Dick Kovacevich, former Wells Fargo chairman and CEO, joins us to talk about what that means for the future of retail trading. Dick, do you think it was an overreaction to the brokerage stocks today, or do they have something really to worry about here?
No, I think there's something to worry about. I've always been a strong advocate of giving your customers a better deal the more business they do with us. JP Morgan does not have a large full-service brokerage, let alone great contact with lower income investors. So I think this is a direct attack on the online brokers.
Is JP Morgan a leader here or a follower? Bank of America has been offering this kind of service since back in 2006.
Exactly, and there's a lot of frees out there. But I think again, this is JP Morgan, I think, trying to catch up a little bit on their brokerage business because they don't have a large full-service brokerage either.
So does it put price pressure on the others to follow, whether it is those who have it as a central part of their business model, or a Wells Fargo, for example, as well, where certainly managing money and having a brokerage firm is also important, though not necessarily central to everything they do?
Well, I think it's at the low end. I think the robo-advisors that have been started by Wells and Bank of America, it certainly will put pressure on the price of that. I don't think it's going to change the fundamental pricing of full-service brokers, because they've had competition from just Charles Schwab's and E-Trade for a long time. But again, they who have low cost for trades may have to lower it more if this really takes off.
Right. I mean, a key to this, Dick, has been the ability to obviously have people access this kind of an app through their phone, something 10 years ago, or even 5 years ago, really, that was not pervasive, but is today. I would assume we'll see more of these kinds of offerings as technology continues to advance.
In all financial products, for sure.
And Dick, part of the takeaway here has been JP Morgan views this as a total customer relationship kind of thing. If you download this app, should that person expect to get a whole new batch of credit card solicitations? Are they just going to be kind of thrown into the new leads file for JP Morgan across the board? And I guess part of that too would be JP Morgan could have all that data that comes with all the activity on this app.
Well, I think there's truth to that, but my guess is they're probably trying to get their existing customers to do more brokerage with them, as opposed to attract new customers. So they already have a lot of this information, but it doesn't come from the brokerage end because, again, they've not been strong in that area. So my guess is that they will focus on is trying to get business that is now going to other companies, bring that business to JP Morgan that may already be their bank in terms of checking accounts and savings accounts and mortgages and so on. It's rewarding existing customers for doing more business.
Are we going to be paying fees at all in the next few years where all of this is going for making trades?
I guess the question is there'd be minor fees, and it could be zero. As you know, the ETFs are going to zero fees. Now, there's other ways you make money than just that particular fee, but fees are going to go lower, prices are going to go lower in practically every industry because of technology and the use of technology to reduce costs.